So what are the first steps for those who are interested in securing funds from your institution?
Well, the first step is you want to meet with your business banker. Sit down, talk to them, let them get to know your business. What are your goals? What are your objectives? And what are some of the challenges that you have? Be completely transparent and upfront. Let them know everything that's going on, because those are what you're telling them helps the decisions to be made. It also helps them with recommendations as to what products are going to work best for you, whether it's going to be a term loan or it's going to be a line of credit, or if you're looking for equipment. A lot of folks will say, I need to buy a car, I need a line of credit. It's really not the right product. You really want a term loan for something like that. So be transparent, spend the time, talk to your banker.
So we're a lot alike, where you want to sit down, talk to your lender. We do commercial lending as well, and just that, really open up and be honest with your lender about what it is that you're looking for. You don't need to know what the terms of them all are, because like Dawn said, everybody thinks you need a line of credit to buy whatever you're looking for, and that's not really the case. You might just need an equipment loan, or you need a car loan, and we're able to help you with those. So really having an open, honest discussion. Talk about what it is that you're looking to finance, and then getting a game plan. So it's going to take a couple of times of meeting before you actually figure out what it is that you're going to want to do. But sitting down and having those talks with your lender is a great start.
I will say too that for those that already have an established relationship with your bank and your banker, when they call to say, hey, let's get together, sit down and get together with them. They're calling for a reason. They want to get to know you a little bit better. They want to find out how the year has gone. We do what's called a relationship review with our business clients, and we sit down with them and talk through, what are the challenges that you're having this year? What would you like to see new? So when they call, take the call.
Also, when you are looking to get a loan, they're going to ask you for a lot of financial documents. So be prepared to have to do some homework.
Yeah.
If you're asking a financial institution to give you money, you're going to need to do some work, because we need to see if you're able to cash flow, if you have a balance sheet, a profit and loss sheet, a personal financial statement. And you should always have one of those ready to give to a financial institution, because that's really going to be helpful when it comes time to be able to borrow money from a financial institution.
And you kind of alluded to this number 4. You were starting to talk about some things to have in place before seeking funding.
Mm-hmm.
Yeah.
So what are some other things or other steps that business owners can take to become loan ready?
Make sure that you have a good credit history with business owners, especially if you're an LLC, sole proprietor. We're going to be looking at your personal credit as well as the business credit. You want to make sure that you have clear financials, like Tabitha was talking about, a balance sheet, profit and loss statement, up-to-date tax returns, and a plan. What's your goal? What are you going to be using the funds for? A lot of times we see folks say, I need to borrow $50,000. Well, what's your plan? What are you going to do? I don't know yet. Well, we kind of really need to know what are the funds going to be used for, because that, again, helps us to determine what's going to be the best product for you guys.
Mm-hmm. Yep. Just like Dawn said, we need to make sure that you have all of your financials in order, and knowing what that list of financials are is very helpful. Having 3 years of your tax returns, having all of your owner's tax returns. When you own a business, we need to have anybody who has 25% or more ownership, their financials, if you're looking to borrow from us. So those kind of things you should be prepared to have, so you can make the loan process go quickly. The longest part of a loan, I feel like, is gathering all the information. Once we have the information, we're able to help you get funding. It's really gathering all of the things that is needed. So making sure you have your tax returns handy and ready, making sure that you have a good bookkeeper or accountant that is able to answer your phone calls when you need them, because a lot of times you all are running the business, they're the ones that are taking care of your financials. And if you can't get a hold of them, that's what's going to slow you down from being able to get the loan.
Another thing too, when we start to look at the process of doing a loan, we want to make sure that the business is in good standing with the state of Maryland, trade name is registered with the state, and that all of the personal property information is filed each year. That's what we run into a lot when we get to that point. The loan's been approved and now we can't go to settlement because the business needs to get back into good standing. So that's a good thing for you to check periodically on your own business to make sure that it's there.
Good information. Any questions so far about that whole startup?
Yeah, I hear this under the whole rubric of business credit, but I think though that we've got probably a number of people here in different stages of entrepreneurship, business ownership. So if you can talk a little bit more about business credit and why it's important and how business credit can be leveraged versus personal credit. If you can talk a little bit more about that and make that distinction, that would be helpful.
So for us, business credit really is the owners. There isn't a credit bureau that reports everything that a business does. And because a business can change ownership, it can change, it's got so many different variable factors that really the way that they are able to figure out how a business is credit worthy or lendable is by checking the credit history of the owners, by checking what their cash flow is. And what that means is how much money is coming in and how much money is going out.
Yep.
How much are we bringing in and how much debt do we have? We always want to see something above a 1-to-1 ratio, right? We want to see that a little bit more money is coming in than money going out. Those are the things that we look for when we are trying to give someone a loan. Yes, we understand that you have the potential to make X amount of dollars, but we need to see what's going on now because that's what pays the bills. So really making sure that you have an understanding of what your business earns, making sure that the owners have an understanding of what the business earns and what the owners earn, because a lot of times the owners are guaranteeing the loan, and what that means is if for some reason the business can't pay the loan, the owners are going to pay the loan. And that's why we look at the owners, because we want to make sure that if something should happen, they have the money on their own to be able to pay the loan.
Yep.
That leads to collateral.
Yes.
Talk about that, collateral.
Absolutely. Yeah, a lot of collateral can be anything from a vehicle that you're purchasing, the equipment that you're purchasing, home, the real estate that you're purchasing. Sometimes we'll do small lines of credit and do a UCC filing, which is a filing against all business assets. So that kind of puts a little bit of a hold on the business assets as the collateral or the guarantee for the loan. So collateral can almost be anything. If you're buying a boat, the boat is the collateral. If you're buying this building, the building would be the collateral. So for something like that, we would want to do an appraisal to make sure that the building appraises for what is being sold or what is being asked to borrow against.
Can I ask a question? I mean,
Yeah.
So I do beads. So
Yeah.
So how can that be used as collateral, or could it be used as collateral? Can my inventory be used as collateral?
It would be tough to use your inventory as collateral because that's something that you're actually selling. So once it's produced and sold, the collateral is no longer there, so to speak. So we would not use that as collateral. For something of your bead business, what do you think you would need as far as like a lending need?
Would it be a purchase of a piece of equipment to help you make the jewelry? Because
Yeah.
then we could do the loan on that.
Do everything by hand.
Do
I would probably be to buy the beads themselves.
Sure. Okay. So
Yeah,
then
that would be
what I would
all
offer.
storage facility or something.
Yeah, if
Yeah.
you came to me and you said I needed money to purchase more beads before I could sell it, I would say a credit card, a business
Yep.
credit card would be a good avenue for you. Or I would even say maybe taking a home equity,
Yep, that's
a
exactly
home
where I was
equity
gonna
line of credit out on
Yep.
your house, if your house had equity in it, to be able to use as revenue for your business.
Yep.
So always look at what you can leverage that you have personally, because you are the business. We always like to see that you invest in your own business when you're asking somebody else to invest. So if you've got something, we're able to help you find that equity wherever it may be. It could be a
Right.
car that you own outright that you're looking to maybe get refinanced, so you can get that money to buy more inventory.
And if you're looking to start credit, we also can do cash secured loans. And that's something where you, let's just say take $10,000, we'll put it in a certificate of deposit for a term of 3 years. We would in turn give you a loan for 3 years, using that certificate of deposit as collateral. And that's for folks who are just starting out, don't have a credit history yet, so that kind of gives you the basis. It secures the bank to say, we know the money is secure here because we have it. You're making these monthly payments and developing a credit file, credit history.
What about guarantees and working with someone like the SBA or some of these other CDFIs? And how do you, I guess if someone is looking to have, I have a line of credit and I just know about a line of credit. I do want to use such as some of the mechanisms where I can get the money to come into my account. People are using things like Zelle and PayPal, and I'm saying a lot here, but some of the ways to stay liquid, and then other ways to what they, I guess, bootstrap money, if you will, with a guarantee. That I'm just trying to get some more insight to some of those kinds of things.
Well, for example, the Zelles and the PayPals and things like that, that's for you to collect funds from your clients or your customers. We have means to help you with that as well, where you can accept MasterCard, Visa, and then those funds are deposited directly into your account.
Okay. That is sure.
Yeah.
What about the guarantees
So like as in a personal guarantee?
or a SBA guarantee? If the SBA comes in and helps with the loan, using those types of guarantees.
Yeah, I mean, we do work with the SBA, and that is something that we would have one of our commercial lenders sit down and talk with you about. Do you want to talk in?
I knew I was going to get thrown off.
Yeah, I knew that was going to
I
come
saw
up.
he was looking
Yeah.
around like it
So,
wasn't me.
So I'm a commercial lender with Shore United. My prior life, I did SBA finance. So the SBA doesn't necessarily lend money outside of COVID, right? So that was a special program that they had. The SBA basically comes in and says, okay, bank, you do the lending for this business. We'll give the bank a guarantee in case that individual defaults. So that's really the only reason that the SBA would be leveraged in situations where there may not be collateral. There's a collateral shortfall, meaning, you know, the collateral is not worth what the loan amount is. So the SBA would kick in and essentially back the bank.
And would the person start with a bank or start with FBA if you want to make that kind of arrangement?
There's lenders out there where they're certified SBA lenders where they can take that application. Because the SBA, again, they don't lend the money, the bank does.
Right.
Yeah.
I've got a question. Doesn't a person that's looking to get a loan, don't they have to show that they've been turned down by bank before they go to SBA?
I don't think so.
No.
No, I don't think the SBA isn't just there for folks that are challenged. They're there to help, like he said, with shortfalls on collateral, and they're an extra guarantee to the bank.
Yeah, a lot of people thought that the SBA was a loan of last resort, right? It's not. It's just an extra avenue that someone can get financing through that may not have the collateral to support it.
I had another question. As we're talking about, you know, SBA and different banks and credit unions, as we look at the business environment for small businesses and businesses overall, are banks still making the same loans as they were before to businesses? What are other financing vehicles that business owners can look at? Because, you know, when I started my own business years ago, my first line of defense was bootstrapping. So what are some other avenues and vehicles that businesses can take advantage of?
You may want to work with the SBDC and economic development. They can help support with some grants and things like that. But to answer your question, banks are still lending money. Yep.
So
Yep.
I will say that the Calvert County Economic Development does have a grant program for small businesses up to $150,000, I believe, where they will help small businesses with loans. So there, usually what it is it's unbankable businesses where they're so close to being able to be lent to but they're just not quite there yet. The economic development has actually stepped in and is starting to help with that kind of help. So there are things like that. I would also, so for us, one of the things that we used to do that we don't do anymore is everything has to have some sort of asset to it. So we don't do unsecured loans. I think you all still do, but we tend to like to have something in case of, a shortfall. But that's mainly because we are member owned, so we don't like to take big risks for our members. It is their money that we are, lending out, so we want to make sure that we are taking all of the proper precautions we can. So we do secured loans, but we're not really doing a lot of unsecured loans. The only exception might be is maybe AR for a government contractor, and that's kind of rare as well, but we really try not to do that.
So you're not involved in the grant process at all?
No, we are not.
No.
So somebody maybe to talk about the grant process sometime, some future.
Like the county, economic development.
Yeah, somebody to talk about grant stuff, how that works for small entrepreneur type.
So they don't go through a bank for that. They actually have funds, and you would want to talk to them anyway because they're going to help you with, if you're looking for a place, they're going to help you with permitting. They're going to help you with any licenses you need. They can help you get through any of the maybe government take that you're kind of having a hard time getting through. So really partnering with economic development is a great tool to use. Also, they work with the SBDC, and they would be able to, and that's the Small Business Development Center, which is through the College of Southern Maryland, and they're able to help you as well. Get a business plan, or maybe there's a spot that is just not quite there yet with your business. That's SBDC can help you with it.
Any more questions? So we have had.
If I may, folks who come to C4 often are at the very beginning of the process. They want to start a business, they haven't started the business, and so they're at ground zero. And when you describe the documentation that you want people to bring to you to initiate a loan, my question would be is, do you have samples available for people? For instance, in terms of a financial statement, can you provide people with a financial statement that looks like what you want it to be when you come in?
Yeah, so we do provide like a personal financial statement to our clients when they're applying for a loan, so that is a form that we could provide.
Yeah.
They probably look almost identical.
Yes.
Yeah. So, and then
so they could just come by and say, I'd like to have one of your personal financial statements.
Yeah, I mean, I wouldn't. Yeah, you could do that.
Yeah, I
Yeah,
think
they
a
could
lot of
probably-
folks
you
need
could almost
to be
Google it,
thinking
too.
about it,
Yeah.
before they're really walking
Yeah.
in for a loan.
Yeah, I mean, that's the best place to start actually with a personal financial statement because it's everything about you as the owner of the business down to what kind of real estate do you own, what are your deposits, what are your balances in your bank accounts. And sometimes that kind of brings to light, maybe I can't really do this right now. I don't quite have the funds.
In Cedar Point, you have an equivalent document, I assume?
We do, yes, sir. So
Super.
we do have that, and for us, if you have a personal financial statement from another institution, we just have you sign our last page and we're able to use, say what Shore has. So we work very well together because we're all asking for the same thing. Usually on the left side, it is all of your assets. On the right side, it is all of your liabilities. Yeah. And it's literally going through everything. And people say, oh, well, I didn't think about that. I mean, we're asking about mortgages, checking accounts, life insurance, retirement accounts, any investment properties, even down to, do you have any vehicles or, a motorhome,
Personal property.
Personal property.
Yeah.
So it really goes down. How many credit cards do you have? What is the balance that you owe? What is the monthly payment on it? I mean, it really gets down to it. And it's just something that everybody should have in general to know what their financial wellness looks like.
But what I was aiming for is mean, folks can do that sort of thing without talking to a bank.
So,
But if they can do it and think through it using the documents the bank will want,
Mhm.
then they're not gonna have to do it twice.
yep, they can also go to the SBDC,
Mhm.
and they will actually tell them how to get started. And that's all
Sure.
free for them. And they do have a personal financial statement.
And you all can accept the
Yep.
one they provide?
Yep.
Super. Thank you.
You're welcome.
Any more questions right now? You all have taken a lot of these questions off my paper. So I'm kind of like fishing through it. I'm like, oh, okay, what haven't we answered yet? So we did talk about that relationship with with the banking partners. So what should a small business owner look for in a banking partner beyond just interest rates and fees? And how do you evaluate risk for small business lending? I know we talked a little bit about that.
Yeah.
Anything else to add?
Sure. So, I mean, you're really going to want to look for somebody who is from your community, your area, that knows what you're looking for. I always say Southern Maryland is so different from the rest of Maryland because we're unique with what our business is, what we do, what our community is like. So having a lender that understands that, you know, in St. Mary's, we've got the Mennonites and the Amish. There's a lot of farming. Over here, we've got, you know, the power plant. We've got a lot of independent owners and watermen. And then in Charles County, we've got a lot of government people. So you really want to know, you have a lender that knows what you're looking for and what your struggles or hardships are. So that way they can help you with whatever the, you know, things might be that you're looking for.
I'll take the second part, evaluating risk. So sure, we take a relationship-based approach. So we want to look at your total relationship with us. You know, do you have your deposits with us? Do you have other lending with us? So we're going to take all of that into consideration. The other thing that we're going to look at is going to be what's your credit history. Again, back to the collateral. What's the collateral for the loan? If we need collateral, and then what type of cash deposits do you have?
Are there specific programs to help minority-owned, women-owned, or veteran-owned businesses access capital more easily?
I would say reach out to SBDC or Economic Development.
And the state of
programs,
Maryland too.
Yeah.
Mhm. So we don't offer programs, but we do help with lending, and we have our commercial lenders that are there every step of the way to help you. We may be able to see once we get into looking into your business what there might be, or maybe take a look at your financial statement and decide that maybe you have something, some leverage that you didn't realize you had.
Mm-hmm.
Do either of you have a success story that you would like to share with the audience today?
And nothing that I could really go into specifics about, but I will say it's back to when you meet with your banker and sit down and have that full-on honest conversation. If you know that there are challenges in the past, let's talk about the challenges. Going to making sure that you have your financial records in order. I had a client that was very, we'll say, willy-nilly with their finances, and when you ask for specific documents, they would come in with it bits and pieces together. And then when we were able to finally sit down, and at that point it was like, based on what you're telling me, this isn't going to work. It's just not going to work. But where's this and where's that, and this piece is missing and that piece is missing. And when he finally sat down and took the time to compile, like Tabitha was saying, all of the documentation, I was able to go, you know what, I can help you now. So it's really, really important to have those financial records in order. I know it seems intrusive when we start asking.
Yeah.
I need a personal financial statement. I need the last 3 years' tax returns. Oh, can you tell me about this or tell me about that? It's just because we're trying to find a way to help. We're trying to find a way to make it work.
I've heard some people say, well, they're asking for too much, so I'll just forget it.
Yeah.
Right? But take that time.
Yeah.
And there's organizations out here that'll help you get it together.
Yeah.
So.
And we really do try to be honest with you. It's a commercial loan is not something that's going to be done in a couple of days, truly. It's going to be 30 to 45 days from beginning to end. And we're going to have a lot of conversations over the phone because things will come up that we need to have an answer to. And it could just be as simple as, oh, you know what, I forgot about that.
Any questions so far? Is there anything else that you want to share, anything that we didn't get to?
So I will say that we were able to help our business owner with a succession plan to have their younger generation take over the business. So, you know, it's the little things where we're able to help them. They want to sell the business to, you know, the next generation. They weren't sure how to go about it. So we were able to help them with the succession plan, help them get a buy-sell agreement together, and really make sure that the business was handed off how it should have been. So, you know, your financial institution can really help you with a lot. It can help you with doing a succession plan, maybe retiring or selling the business, getting a business appraisal, doing those type of things. Your financial institution is able to help you with.
Thank you, Donna. Thank you. So, Hans Petit Holmes has joined us from JP Morgan Chase. So I'm going to give him a few minutes to kind of share what it is that he does.